Now, we had the run up in July to July 3rd. We went sideways for a couple of weeks, and then we had the final surge in late July to the July 31st high. And the seasonality suggested a August sell-off. That has not happened. The S&P's gone sideways, and we saw a delayed sell-off for the Nasdaq 100. The Nasdaq 100 dropped nearly 4.30%. It's rebounded up a little bit. It peaked August 13th. There was a delay. We still got an August sell-off. Rallied back up to the 10-period moving average. The S&P had sold off, rebounded back up. Now it's testing the August 15th high. We're dropping 2.2%. Seasonality isn't perfect, but we're likely going to have a delayed sell-off, and probably it's probably going to spill over into September. And again, if we see it happen over the next 3.5 weeks, we could see it take us into the Fed meeting on September 17th, 3.5 weeks from now. As I talked about my last update, it appears that Powell is caving under political pressure. It sure looks that way. Again, Powell said that the shifting balance of risks may warrant adjusting our policy stance, and that's what caused the rally. Powell is indicating that the shifting balance of risks may warrant a rate cut, citing the jobs report, the weakness in the labor market, the deterioration that we're seeing, at least for now. The revisions could happen, and then the weakness in the GDP. We're going to see inflation indicators turn back up, so the question is, will Powell do it? Well, looks like he might be caving here, as I talked about in my Friday update. The question is that if the jobs data that we got ends up turning back up, if it's revised back up, it was sharply revised downward. We had a big revision downward with the jobs report in the last report we got for the prior 2 months. I talked about it in great length and detail. Powell's now shifting his priority, saying at Jackson Hole, in a nutshell, that unemployment is now a bigger threat than the inflation. That's basically, in a nutshell, what Powell is saying. All I'm saying is that inflation is ticking back up, as I correctly predicted it would, and is that going to put the Fed on the sidelines, or do we see Powell cave at the September meeting? I said, does he just throw Trump in the market a bone and then still play the waiting game? 1/4 point cut's not going to dramatically change anything. Trump's wanting Powell to cut by 300 basis points. That's not going to happen right now, but eventually the Fed will panic once the stock market peaks, begins to crash. The crash to kick off the recession, that's when the Fed usually panics. So I don't know. It looks like Powell might be caving here. All I'm saying is that if we see a strong jobs report come the beginning of September, and we see the revisions revised back up, what does Powell do then? So going to be watching that jobs report very closely. We have the inflation data. The CPI is on September 11th. The Fed meeting's on September 17th, about 3.5 weeks from now. So if we do sell off ahead of the Fed meeting, the Fed cut give us a bottom, and we see Powell cave, is what usually happens is you do start seeing a deterioration in the labor market, either going into the recession or after it already starts. The Fed, in the past, is usually blind to this. Like I said, we don't know if the revision downward, they were sharp revisions. Now, remember, in the last jobs report, we had massive downward revisions. Powell justifying a potential shift in monetary policy that is shifting in the balance of risks may warrant cutting rates. So that big revision down for May and June, you may recall, May numbers were revised down by 125,000 from 144,000 down to just 19,000. And June, even lower. June was revised by even more and went to a lower number. It was revised by 133,000. It went from 147,000 down to 14,000. A revision of 258,000 jobs over those 2 months. You can see that right here. And again, The people over at BLS continue to overestimate and revise things down. Right now, this year so far, they've revised down with this 258,000. That's in addition to another 200,000 that they have revised down. Where they've revised down now, overestimated, and then revised down by 461,000 jobs. They overestimated in 2023 and 2024 by hundreds of thousands of jobs, as I've talked about. So the question becomes, what happens? Is this number real or is it fake? And we don't know because they give us fake numbers. We don't know. Hopefully now they'll get somebody in there that will give us the truth. I have no idea if this number is real. If it is revised up, do we get a cut out of Powell? Or is this real and we're now seeing the beginning of a dramatic deterioration in the labor market will appear just before the recession or as the recession begins? These numbers end up getting revised upward. Powell still cut in September. If the inflation data ticks back up and continues to rise, does the Fed sit on the sidelines or do they cut? And if they cut, will it spark a rally? But eventually, I think we'll see Jamie's diamonds crack in the bond market and again, spiking, bonds collapsing, an inflation freakout. And I think the inflation indexes will go back up. Eventually, Wall Street will panic. The stock market will top, peak, tank. That's when I think you get the jumbo cuts. Will Powell cave right here? Maybe. He's under a lot of pressure. But I told you I expected that the inflation indexes were going to bottom out. Here with the CPI bottom out and begin to rise. It is doing that. And the PPI is getting a higher low. PPI already bottomed out, getting higher lows. I talked about starting to rise back up. It had rose at the fastest pace in 3 years. And we saw each of them uptick by 1%. So do we see the inflation data come in ahead of the Fed, sit on the sidelines? We still see weakness in the labor market, and these numbers are real, or do they end up getting revised back up? Get a strong jobs report. So again, if we see a strong jobs report and inflation tick back up, do we still see Powell cave? It looks like Powell is now going to cave. I know a whole lot of people that wouldn't cave under the amount of pressure that Powell is under. See what happens. If we do see a strong jobs report and revisions back upward, and we do see inflation continue to rise, again, that could rattle markets. Also, we're going to be getting Trump's semiconductor tariffs here and eventually the pharma tariffs. And we have NVIDIA earnings next week. It's broken the trend line. I went through NVIDIA in great length and detail in my last update and covered it for you last week. Broken a major trend line. Could NVIDIA earnings end up giving us a sell-off? We'll see. A couple of different catalysts that could rattle markets, and then we'll be watching closely as we go into September, the jobs report and the inflation data. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel today. Follow the link below to take you to a secured site. You can donate any amount you want or make a recurring donation. If you do that, I thank you. Thank you for your consideration for that. Watch the video all the way through. Towards the end of the video, I'll show you my trending signals, my momentum signals. My last update, I already covered the bullish and bearish reversal of condition. I'll show you what's going on with some of the other indicators. And I'll show you the Nasdaq signals as well. I talked about the little divergence that was forming at this trend line on the log scaling with our weekly time frame with our RSI. We have another interesting divergence, and that is with the NAAIM exposure index. It is diverging. S&P August 15th made a new high, and it still may not be done if we try to take out that high next week. But we have this divergence going on where the NAAIM exposure index diverging with the S&P up at extremes, and these extremes or divergences at extremes tend to mark turning points. You see pullbacks or reversals. I'm showing you that chart because this chart with the exposure index is not yet updated. We saw it tick back up slightly higher than this other peak right here. It's still diverging from the July 3rd peak. But as you can see, some of these extremes or divergences at extremes have marked sell-offs. It was our February sell-off. We had an extreme and a divergence at an extreme. Ended up giving us that bigger sell-off. It marked the top over in 2022. The bottoms over here in 2022. These extremes have marked the areas where we've had pullbacks or the big reversal in February. Slamming right into this trend line right here. Just above that level is our linear trend line, which I showed you in the daily time frame in this video and the weekly time frame in the last video. The raw data of the put to call ratio that's here in gray is turning down. We're seeing complete complacency. We're seeing the 5-day moving average of the put to call ratio diverging. We saw divergence at the July peak, very similar to this. It might be bigger here if we end up going higher, slamming into resistance. But again, it really looks like we're doing something here, like what we had back over here with the February peak, and that led to a reversal. I expect a bigger pullback. There was complacency back then too, and that's what we have right now. So I still think we get a pullback. I think the seasonality is delayed, but once we get a pullback, I think we will get the final climax rally. The final phase of the blow-off top is underway right now. I think we'll get the final climax rally. Likely take the S&P to 6,700, maybe just beyond it to 6,800, maybe a little bit lower to 6,600. Trend lines I've been watching in the weekly time frame that I've shown you each and every week. What I find really interesting is both Nasdaq and Bitcoin. Here's Bitcoin's daily chart. Nasdaq peaked on August 13th. Bitcoin peaked on August 14th. They both sold off. And with Powell, they've rebounded back to the 10-period moving average. Here, Bitcoin's having the 10 cross below the 20-period moving average. The red line is the 10. The 20 is the blue. So it's kind of interesting. And I just made a Bitcoin video. Bitcoin signals are still bearish. With this rally back up, and the RSI just went up to the 50 level and turned down. If Bitcoin loses this area and we drop back down, will Nasdaq join it? Now, Bitcoin's had these bigger sell-offs than what we've seen with the stock market. Again, from the April low, we've had bigger corrective moves with Bitcoin. Nasdaq just dropped 4.30%, rallied to the 10-period. Bitcoin here dropped 10.25%, rallied back to the 10-period, testing the broken trend line. So we'll be watching to see if Bitcoin does break the support level, get a bigger move into the trading range or towards the 200-period moving average. Does the Nasdaq and S&P eventually join it? Nasdaq is nowhere near its highs. It's had a bigger sell-off. S&P's rallied back up to its highs. A tech sell-off as the Dow is making new highs, likely camouflaging the tech sell-off. But what's interesting is, the S&P and Nasdaq hit major resistance levels. So did Bitcoin. All of them hit trend lines. They're linear and log scaling. And if you want to see the Bitcoin trend lines, watch my Bitcoin videos. I show those trend lines. It's pretty fascinating. The stock market did the same thing. Bitcoin got a 9 count. S&P got a 9 count. Bitcoin got it on the 13th, the day before the peak. And if Bitcoin breaks this level of support right here that we're bouncing off of, it will get a bigger drop. And if it does the stock market join it? Right now, they have a short-term positive correlation in that we're seeing the market sell off from the mid-August highs, at least so far. S&P is going back to test it, but Nasdaq and Bitcoin just getting a rebound. They do have periods of short-term decoupling we've seen with these corrections, but sometimes they have, most of the time, they have a positive correlation and a long-term positive correlation, so it's worth watching. Bitcoin got that 9 count. So did the S&P 500. Nasdaq got it canceled out, but we did have a 9 count there. We're getting this rally back up to test the highs. Directly overhead is a resistance. I talked about that in my last update. S&P does try to make a new high. Last update, I talked about the trend line directly overhead. This is our linear scaling. We turned off this trend line here from the 2023 low in July and August. If we go higher, this is where we're likely going to stall, and that's at the 6,500, right around 6,500, 6,510. Lower high, we need to go back down and take out our recent low here and start moving to test our 50 period. It'll be interesting to see what happens with Nasdaq at the 10 period. Far Bitcoin's getting rejection there. Does Nasdaq? What happens with the S&P? Does it go up and hit this trend line again, or does it make that lower high? Go up and hit the trend line, you get a triple divergence on the RSI, as I showed you in my last update. But what could happen is the Dow could get a 13 count. Previously, last week and week before that into the weekend video, warning you the Dow might mask what's going on. Already seeing a tech sell-off, and yet the Dow's moving to new highs. I talked about the previous peaks from here in early 2025 and late 2024, and I talked about it going above that level, above the 45,000 area in the early stages of the sell-off to camouflage what is going on, which is what we're seeing in the tech sector, and that is distribution. You got a 12 of a 13 count there on Friday with the Powell rally. Dow's forming its own divergences, but do we end up seeing a 13 count complete surrounding this push to new highs? It'll be interesting. We're at bar 12, so if we get another bar that is above the bar from 2 bars ago, which would be this bar right here, come Monday, if we get above a bar that is above the bar from 2 bars ago, the 13 count could complete. But it's just something we're paying attention to, and we have a possible Dow theory sell signal. I talked about that in my last update, but I wanted to show you this. The 12 of a 13 count. A 13 count is very much in play. Count doesn't have to be in consecutive order. It can stop and start. And, we got up to bar 11 here, then it stopped, and now we're at bar 12. You got to be above the bar from 2 bars ago. The 9 counts. There can be no interruptions. Every bar has to be above the bar from 4 bars ago. Got the 9 count here, went a little bit higher, and then we had the volatility. Do we complete a 13 count here? It looks like we may for the Dow. Big wide range bar. What do we get on a Monday? If we go higher, do we get some kind of reversal bar or doji or a spinning top or something? We'll be watching the Dow closely. What's interesting is the Russell has the same count. We had a big rally on the Russell on Friday with Powell. The Russell was up 3.86% on Friday, pushing to a new recent high, still not making new highs, above the high in late 2024, which was marked by a 13 count also. Plus, we had a 13 count here at the April bottom. Remember, I talked about that. Nvidia got one there too. You got a 12 of a 9, just like the Dow. These 13 counts have been very interesting. Here we had it mark a bottom. Over here, we had it mark a top. We went a little bit higher, but eventually it led to this big sell-off. Yeah, these other counts marked counter trends in the downtrend and the uptrend. But again, these counts are associated with bigger sell-offs or reversals. I think we'll get a bigger sell-off. You got a potential 13 count on the Russell and on the Dow come next week. Maybe we get it Monday or Tuesday. The bars are above the bars from 2 bars ago on Monday. We'll get it. I told you I was watching NVIDIA for it, and NVIDIA ended up getting it there on Friday. Above the bar from 2 bars ago, it completed a 13 count. Because it has a 7 of a 9 to the downside as it's been selling off, moving downward. It was a 9 count that helped me mark the stock market bottom over here as NVIDIA got that 9 count. I talked about that at the time. Russell got that 13 count. If I just zoom out here, we got a 9-9 signal at the bottom for NVIDIA, which again is a reversal pattern here. 9-9 gave us a sideways correction. Counts have led to corrective moves. Could this one be bigger now? A potential 13 count on the Dow and the Russell next week. We did get it on Friday with a lower high for NVIDIA. NVIDIA could still rise to the 10 and 20 period moving average in the cloud. I showed you those charts in my last update, but wanted to show you these. Most signals are bearish for the Nasdaq 100. S&P, the signals late last week on Thursday were mixed. On Friday with the rally, many of them now turned back to bullish. So we have mixed signals. We have bearish signals for the Nasdaq, and S&P signals tried to turn bearish, but are still hanging in there on the bullish side. As I said on Thursday, some of the signals turned bearish. We got the momentum turning bearish, and we got some of the signals, trend signals turning bearish for the S&P, but they were mixed. Here, the signal's still bullish. And with the rally on Friday, some of them reverted back to bullish. We have signals bearish for the most part for the Nasdaq and bullish for the most part for the S&P. Signals on the Nasdaq, bearish. Signals on the S&P, still hanging in here bullish. A couple of signals turned bearish Thursday, but then reverted right back to bullish for the most part. So we have a mixed message. Signals on Nasdaq are bearish. Signals on the S&P are bullish or had turned bearish and turning back to bullish. Again, if S&P goes and makes a new high, we could get another divergence between the Nasdaq and the S&P, which again is often associated with tops and bottoms. Signals for the Nasdaq here, bearish. S&P signals still bullish. Again, I did have some signals turn bearish on Thursday, but they reverted right back to bullish. And here, other signals never did turn bearish, but Nasdaq signals did. Nasdaq signal, bearish. S&P here, hanging in there on the bullish side. So which one's right? S&P right? Does it stall at resistance and end up joining Nasdaq? And Nasdaq's right, ends up dragging the S&P down further with it. Nasdaq, red bars, bearish. S&P is still hanging in there with blue bars. Broke this other trend line. We may be in backtest mode here. I talked about in my last update, the same with the Nasdaq, if it can go higher. Because that means the S&P likely makes a new high. S&P slam into resistance again ahead of NVIDIA earnings. We'll be watching what happens at resistance with the S&P. Signals still hanging in there for the S&P 500, not so with the Nasdaq. Signals are still bearish on Bitcoin. So again, Bitcoin takes a tumble. Does the market follow it down? So do we see a sell-off into the Fed meeting maybe over the next few weeks? Had other signals like right here, signals started to turn bearish. The red line, the red bar, but then it turned right back to bullish. The line flipped right back to blue. Green bar, look at it. The background started to turn red, and then it flipped right back to green. So again, I got mixed signals Thursday, and then the ones that turned bearish, for the most part, turned right back to bullish. The Nasdaq signals are still bearish. Then on some indicators, I had some of the momentum turn bearish, but while the trend still remained intact. Again, signals that did turn bearish reverted right back to bullish, but there was no sell signal triggered here yet. But I have, again, signals reverting back to bullish on S&P, while Nasdaq signals remain bearish. Now, if you watch my last video, I showed you that the momentum has shifted on Thursday to bearish. We got a bearish reversal of conditions. On Friday, it shifted right back to bullish to a bullish reversal of conditions, canceling out the signal. I did that in my last update, but here the signal remained bearish. This is interesting. This is my other momentum signal, the momentum line. It did turn bearish. The rally back up has not changed the signal. It's still bearish as momentum itself is moving into the negative region and staying there. The S&P daily chart. So it's interesting. S&P does go a little higher at 6,500, the low 6,500 area. There's major resistance here of the trend lines. I showed you that in my last update. If it gets a lower high, come back and take out this low from last week. All the signals turn back to bearish. Here's a signal with the momentum that still remains bearish. If I remove the color reflecting the trend, you can see the momentum line is still bearish. What's interesting? With Bitcoin, the trend has moved to flat line. We sell off, we drift slightly higher, sell off, and now drift back to test those highs. We're going sideways, major resistance directly overhead. You got your Bollinger Band overhead. If we do go higher, the trend lines I showed you in the last video come into play, and the upper Bollinger Band once again. We are going sideways. Signals turning bearish, back to bullish. A sell signal warning sign, but momentum tried to flip and it couldn't do it. Bars turned red and they flipped right back to green. So again, mixed signals between Nasdaq and the S&P. We got this signal on the 15th as we slammed into resistance. So far, that's just given us the sell-off, and now we're going back up and testing the highs. We do go higher. We have the resistance trend lines I showed you in my last update directly overhead. Signals turning bearish, right back to bullish on Friday. So again, we'll be watching. Does the S&P eventually join the Nasdaq? Have all the trending signals and momentum signals turn bearish. Momentum line still is bearish, but we reverted back to a bullish reversal of conditions as I showed you in my last update. The S&P trend reverted back to neutral now on Friday, getting a green bar. The cloud turned back to green. So again, it dodged the bullet for now. If we go higher, we get triple negative diversions on the RSI and slam into resistance yet again. That'll likely give us a 13 count on the Dow and the Russell if that happens. S&P goes higher. Or does the S&P and Nasdaq sell off as we've seen already and the Dow goes higher and we start seeing the S&P start joining the Nasdaq? Possibly in backtest mode from the broken trend line from this August 1st low, but the trend, S&P trend is still bullish and the S&P is still in a risk-on environment. Candles going back and forth, very similar to what we had just before the February peak, kind of going back and forth in this trading range. S&P daily here.